to episode 17 of The Bottom Line. As always, I'm joined by my co-host Syed. So again, we've got a very special episode for you guys. We're going to kick things off with a tech update from Syed. We're going to get into a discussion on the Coinbase IPO and a further discussion on the cryptocurrencies. Obviously, a lot of crazy stuff has happened there with Doge going basically to the moon, you can say, and followed by a swift tank along with the rest of the cryptocurrency. So we'll talk a little bit more about that. So I'm also going to talk about Google Dorks, and we're going to end off with our stock picks, an update from our picks from last week, as well as what stocks we're picking for the upcoming trading week. So with that being said, Syed, the floor is yours for your tech update.
Thank you, Deepak. Hey everyone. Hope everyone's doing well, staying healthy during these times. For the tech update this week, as we all know and probably heard in the news, there's the cyber war pretty much going on between Russia and the NATO countries, right? Again, related to the Solarwinds breach, where they're getting more and more information that Russia is behind the attack. So that's developing news there, and there's a lot of articles on it, and I will leave a few of them in the description below for you to see. But other than that, there are a few other things that went under the radar, I would say, last week. So let's get started on that. So first of all, there's cyber criminals that are targeting unpatched exchange servers by installing cryptojacking malware. Now, the exchange servers, Microsoft's still dealing with them, and a bunch of them are unpatched, right? And what cyber criminals are doing is that they're exploiting these unpatched Microsoft exchange servers. And cybersecurity researchers reported that an unknown attack has been attempting to leverage the proxy logon exploit to unload malicious Monero crypto miner onto exchange servers, with the payload being hosted on a compromised exchange service, the Clubhouse. And basically, regarding Clubhouse, so for those of you that don't know what that is, it's basically an app where like there's room setups for voice chat regarding various topics. A bunch of topics, and it's been a trending app that people are using, obviously with lockdowns and COVID around the world. But with the extremely high usage rate, there's also been security problems coming up for their application. So the Clubhouse API, which allows everyone, it's allowing everyone to scrape public user data. And recently, so April 13th, last week, an SQL database containing 1.3 million Clubhouse users was posted on a hacker forum for anyone to access. The data included names, social IDs, social media profile names, and other details about Clubhouse users. And also, this article says that Clubhouse responded quickly, stating that the company has not been breached or hacked. Rather, the data of the 1.3 million people posted on the cyber criminal forum is all public information, which anyone can access via the app or their API. And the company statement has raised concern about Clubhouse's user privacy. And I wanted to bring this up because I'm sure that like a few of our viewers, or maybe a lot of our viewers, have heard about this app, or maybe are trying to use this app. And once again, we've seen this with Facebook and other apps regarding privacy. And Clubhouse joins the club with that leaking data and then claiming that it's publicly available, right? So it's a major privacy concern here, and I just wanted to bring that up. Another leakage happened. So this is from April 12th. And this is on LinkedIn. So an individual is selling the data of 500 million LinkedIn profiles on a popular cyber criminal forum, according to news reports. And the leaked files contain information about the LinkedIn users whose data has been allegedly scraped by the threat actor, including their full names, email addresses, phone numbers, workplace information, and more, according to Cyber News. And users on the forum where this data is leaked could view the leaked samples of about $2 worth of forum credits, and the threat actor was auctioning the 500 million user database for at least a 4-digit sum. And the threat actor claimed that the data was scraped from LinkedIn. Cyber News was able to confirm this claim by looking at the samples provided on the hacker forum, and LinkedIn later forming that the data for sale was not acquired as a result of the data breach and is an aggregation of data from a number of websites and companies. So again, LinkedIn's claiming that it was publicly available and the hacker was able to find this data. So there's another privacy concern here. And other actors are looking to profit from this data leak as well. Again, I'll leave the article in the description below so you can check that out. But first we have Clubhouse and now LinkedIn again. So again, privacy concerns everywhere with these social media sites. And now moving on to Australia now, and there they have a university that's been affected by over 5,000 individuals affected by a data breach. So Swinburne University in Melbourne, Australia, has confirmed that over 5,000 individuals have been affected in the data breach. This data was event registration information from multiple events from 2013 onwards, and the event registration webpage is no longer available. So that's a developing story there that I thought our viewers would find interesting. And next up, I have Hackboss malware. Is posing as a hacker tool on Telegram to steal digital coins. So, and for those of you that don't know what Telegram is, it's a messaging app like WhatsApp or Signal. You can see it on your app store. It's quite popular, and what it's actually doing is that this malware is distributing. It's a crypto stealing malware that's distributing all over Telegram, aspiring cyber criminals under the guise of free malicious applications. Researchers have named the malware Hackboss and say its operators likely stole from more than $500,000 from wannabe hackers that fell for the trick. And basically, they have a fake user interface. And although there is nothing sophisticated about Hackboss, the scheme proves to be effective as it tempts victims with the prospect of getting hacking tools, mostly for brute force passwords for banking, dating, and social media accounts. So something to look on there. It's basically the hackers phishing hackers, basically, or wannabe hackers, basically. That's what it's trying to do.
We actually have some breaking news here. Actually, the U.S. Secretary is supposedly set to charge several financial institutions for money laundering via cryptocurrencies. So again, this is starting to circulate on social media outlets. There's no legitimate articles on this, but it is in circulation. It is trending. So there might very well be an article coming out from a legitimate source. But again, the fact that this is actually circulating now, I think this is something to be cautious of as crypto investors. But to further exaggerate here, or just to expand, sorry, I should say, is that India is actually banning cryptocurrencies, finding anyone trading in the country or even holding these assets. So even if you hold Bitcoin in India, you can actually be fined for it. And if you've used it for any transactions, they are probably going to investigate you. So actually the bill that they're passing, and this is on CNBC, so you can refer to the article there, it's one of the world's strictest policies against cryptocurrencies, which would criminalize any direct involvement with crypto.
Wow.
So the fact that we even have crypto on Index, for example, that's criminal in India now, and you can actually be fined for that. So that's something to be very wary of, especially
that's a major market.
Yeah. Exactly, especially considering the IPO of Coinbase this past week, which we can get into right now. But really, if you hold any cryptos on Coinbase in India, that's actually criminal now. So that's absolutely insane. But moving on from that, let's just talk a little bit about the IPO this week. So it opened actually at 381. They expected the price to be at around 250, but obviously, as retail investors, we know that by the time we get our hands on one of these new stocks, the IPO, it usually runs up significantly. So we actually were able to buy at 381 if you place the market order in advance of open. Almost immediately, it did drop to, I believe, a low of 310, which did get bought up. But it hovered around the 350 range, sometimes dipping below that around 320, 330. But it looks to be settling in around the 340 mark, which is where it closed basically on Friday. But obviously, this news would have significant consequences. And you see in the other crypto-related stocks like Riot and Mara, they actually got liquidated. Basically, I think what happened is retail dumped those stocks to buy Coinbase. So you already saw a massive sell-off there. Coinbase also sold off from its opening price, but like it's interesting the timing of it now, because if there is more regulation being in place here now, and a lot of the luster behind cryptos being lost, we might very well have seen the top for crypto, at least for now, because you remember in 2017 when it peaked, Bitcoin fell all the way down to, I think it was like $5,000 again, USD.
Yep.
So
Yep.
it's seen if this is just a correction or if it is a steep sell-off. But I was personally thinking that once Bitcoin hit around the 70,000 USD mark, that it would retreat, probably about a 50% correction, just because of the way it's gone off over the last 6 months or so, or almost a year, basically. But it remains to be seen whether this is just another pullback for the next leg up, or whether it will actually come crashing down significantly. But yeah, definitely something to keep an eye on. And Syed, I know you wanted to talk a little bit more about the business model of Coinbase, so I'll let you talk a little bit more about that before we move on.
Yeah, so Coinbase, like you mentioned, just hearing the news about India banning it is gonna impact crypto in general and Coinbase. Obviously, as it's a strict measure implemented by their government, and that's breaking news there. But long term, and I talked about this on our social medias, long term investing into Coinbase. So right now, Coinbase's profits are based on transaction fees. So I'm thinking long term in the future, right? What if, like, I'm sure there's exchanges out there, or like exchanges that are thinking about becoming like having rates lower than Coinbase, even potential rates of zero. That big zero is gonna lure customers into going into that exchange and leaving Coinbase, because transaction fees are things that like people look at, especially day traders, right? Day traders in crypto. Every time they make a transaction on crypto or on their exchange, you have to pay like a certain percentage of fees, right? So if an exchange comes out in the future, and I'm thinking like 3 years, 4 years down the line, right? Or even 2 years, if an exchange like that comes out, would Coinbase be able to stay on top? Is my concern. And that's a business model that I feel like competitors are gonna eye. And we saw this in the stock world too, with Robinhood, right? How they offer $0 transactions, right? So would someone in the crypto world, an exchange in the crypto world, be thinking about that right now? I wonder. It could be a possibility.
Where my stance on that is, you've seen with Robinhood, with the rise of the meme stocks, we could say, like the short squeeze, that what happened with Robinhood is that they actually shut down trading for these stocks like AMC, like GameStop. So you weren't able to, I think you were allowed to sell, but you weren't allowed to buy more than one share at a time, right?
Yeah.
I think that's what they did. So there was some sort of manipulation that people felt was happening there, right? And I think it goes back to that same principle. Like, you want to be in an exchange where you feel like you have the ability to buy and sell, right? Like, the security aspect is big, because even when the security got halted, like I remember GameStop on TD's platform was halted for a little bit, but they never actually prevented you from buying or selling. It just took a little bit longer for the transaction to process, which is fair because of the volumes we were seeing. But really, if you have a situation like that again, and I think Robinhood had the same thing with Doge as well. I think there was an outage on that. So if you have those concerns, like, first of all, Robinhood, I think people just generally have a little bit more comfort dealing with, just because so many people have adopted and use Robinhood. But if you're talking about crypto exchanges, how many of them are out there that you actually feel comfortable putting your money in, right? Like, there's so many exchanges, and one that comes to mind is Einstein, which back in 2017, when it saw that massive run up, the exchange went bankrupt basically, and whoever invested or had coins there lost all their money. So as someone who potentially got burned on that side, or just learning from that experience, you don't want to actually put your money into an exchange that's new, unproven, or doesn't have a widely adopted user base, right? Just for security purposes. Because you can think, like, you buy Bitcoin at $5,000, it goes up to 70, and all of a sudden, when you want to go sell, you can't sell, right? So you want to avoid that situation. And I think the security purposes, we always talk about data protection, data leakages, all those things we talk about down on the bottom line, right? If you go to an exchange that's unproven or new, you always run that risk of, okay, what if your information gets out, right? So I think there's multiple facets that you have to take into consideration. And even if another exchange does offer like zero transaction fees, whatever the case may be, I think people will be willing to pay that transaction fee for the added layer of comfort and security. And I think until there is a legitimate competitor to Coinbase in that sense, I think they'll always have the large market share.
Absolutely, yeah. You mentioned that, and I feel like that's a logical thing to do. As here at the bottom line, we talk about security and privacy and data leakage all the time, right? That's a logical thing. But I feel like, and I don't know, what do you guys think? What do our viewers think? Like, would you go for a exchange that offers zero transaction fees? Would you do that right away? And it's unproven. They say that they are secure and stuff, but would you go for that? I don't know. I think logically, yes, you would stay with the more reputable one and the more secure one. So in this case, Coinbase, or in stocks, you would stay with like TD or CIBC, right? Or whatever you use, right? And you wouldn't switch to like a Robinhood per se, right? But I feel like the majority of the people, they see the word free and they jump without looking at the security ramifications. And I don't think that's a smart move, but that's unfortunately the way these new companies market, right?
I think the people that would jump on that are probably more so retail investors that don't actually have much invested in these cryptocurrencies, because you'd be hard pressed to find someone with a significant amount of cash, I think, going into an exchange that's unproven or sketchy, we can say, quote unquote, and put a lot of money in there, right? Like if you're talking a few $100s here and there, like, okay, fine, I'm not going to go pay copious amounts of transaction fees for that. But if you like, that's why we talk about crypto wallets, right? If you have a lot of cryptocurrencies, you don't even want to leave your crypto on the exchange. You want your own wallet. So I think by that virtue, if you actually look at the big pockets or the big money, that's only going to flow into something like Coinbase. It's not going to go into something that's unproven. And Robinhood, we see, like, I see a lot of people gravitate to Robinhood, but Robinhood technically has proved itself, right, over the years, and it is planning on even going public. So now it's going to be a publicly traded company. People are comfortable in publicly traded companies, right? So that gives it another sense of legitimacy, just because of the scrutiny that's placed on the stock, right? So, or on the company when it is publicly traded. So I think that all of that factors in, and like I said, like, I think the big money is going to stick with Coinbase until there is another major player in the market, but I don't see that for now or for the immediate future. So I think for now, Coinbase is going to be the dominant one in terms of market share.
Yeah, for sure. Yes, and great point. I was going to bring that up about crypto wallets. Once again, want to reiterate the fact that if you are big on crypto investing, make sure you don't leave your funds, your cryptocurrency on the exchange. Get a wallet, get a hard wallet.
Actually, if we can, why don't we show our viewers what or how the market's actually reacting to this news that's coming out? If you pull up investing.com, we can see what the price movements are looking like.
All right, here it is. And for those of you, once again, that are listening to the podcast as audio, be sure to watch the video of it, as we are sharing our screen, and we're on investing.com looking at the crypto prices. Deepak, take it away.
First thing I see popping in front of me is the 24-hour change, and you see a lot of red there, right? So yeah. Bitcoin, the leader of the pack, I remember it was up to 63,000, I think, last week. Now it's down to 53,000. So that's a major correction there. Ethereum down 10% over the last 24 hours. Ripple down another 10% over the last 24 hours. Tether's still holding strong. You didn't see much of a gap up there, so I guess that makes sense. Cardano, Polkadot, they're all down. Dogecoin saw a massive rally up until I think it went almost to 40 cents, right? Now it pulled back to about 26. I can't really comment on Dogecoin because it doesn't have any value anyways, and it has no business having a market cap higher than something like Best Buy. But ignoring that, despite of that, it's still down 18%, so it's selling off with the rest of the market. Litecoin's down 14%, and really across the board, you're seeing a huge sell-off in reaction to this news. So definitely something to keep in mind. I mean, if you're really courageous, again, do your own due diligence, make sure you're following your own risk tolerance. But if there is ever a time that you want to get into cryptocurrencies, if there is a massive correction that's sustained, then that's the time to buy, right? You always want to buy on the red days rather than the green days. So, I mean, if you are confident in the future of crypto, like seeing the down 10, 15, 20%, that might be a good time to start phasing in some buying, right? But again, you have to be a little bit more informed in the fact that if it is dropping off, like what's causing the sell off, right? Is it just profit taking, or is it something else? In this case, it seems like it could be something else with the regulation. So definitely proceed with caution if you are taking a position in it. And again, we talked about stop losses in a previous episode, but again, you don't want to ride this all the way down. If you have made significant money on cryptocurrencies, then make sure you are taking some profit. You don't want to see all of it dissipate. So I'll leave with my viewers with that to end off the segment. So, do you have any other thoughts to add?
No, the great points there. And yeah, I would mention the same thing to our viewers. And the news from India coming out today, right now, is something to keep in mind. And I feel like that's going to cause more reds in these coins, not only Bitcoin and Ethereum, but also the altcoins as well. So just keep an eye on that. And like Deepak says, know your stop loss and do your due diligence, know your risk tolerance, and yeah, pretty much. Again, crypto is very volatile, and as you can see, especially these altcoins. Again, Dogecoin is a meme coin. I still don't know how it went up that much. But with that being said, it's due for a tanking, and you could gain a lot of money, but you could also lose all your money. So be careful there. For these altcoins, I feel like we talked about the good altcoins, right? In our crypto exclusive, like Cardano, Polkadot, XRP, Tether, Binance Coin, all of them. They have great foundations. They have a great blockchain, etc. Won't go into get too much detail there, but those are good coins to like perhaps put your money in by doing your own due diligence. But don't blindly put your money into Doge, right? I mean, yes, enjoy your profits for those of you that made profits, but at the end of the day, it is a meme coin. It has no foundation behind it. There's like an unlimited supply of it. Like, so just I don't know. You just gotta think about it, right? And do your find out what the future is of that coin, right? Like we mentioned, like for example, look at Litecoin. It's like it has a similar blockchain to Bitcoin, but 4 times faster, etc. So you look at like what they have going for them in the future, right? You can't just invest in a hype train like Dogecoin or like something like SafeMoon or something like that, right? And one thing I wanted to mention here is knowing the difference between a token and a coin. So you see a lot of hype coins out there on social media, like where people are making their own quote unquote coins and then telling you, oh, I made this much, because they're like what 0.2 of a cent, right? Of a cent, right? But those are tokens actually. Know the difference. Not tokens. Tokens are created and they are behind like a coin's blockchain. So like you can create a new token and put it behind the Ethereum blockchain and pay gas prices and you can pump it up, right? But that's a token. So know the difference. Coins on the other hand have their own blockchain. So know that difference. And I feel like that's something that people need to get educated on. Yeah, I just wanted to end off there. We'll get more into token and coins in the future and explain to you guys what the difference is, but that's really a high level overview of that. Don't fall for tokens because they're just using another Bitcoin's blockchain and paying high gas prices and hyping up a coin to pretty much get profit for themselves, right? So yeah, I just wanted to leave our viewers with that, and we'll talk more about this. So with all that crypto talk aside, we're gonna move now into our next segment with Google Dorks. Now, I touched upon Google Dorks a little in last week's episode where I showed you guys the phone OSINT tool where it was basically doing advanced Google searches, and that's what Google Dorks are. It's advanced Google searching, and I wanted to show you guys that sometimes in order to find information, all you need is Google, and that's it. You can find a lot of stuff on Google by doing these advanced searches called Google Dorks. So without further ado, I am going to share my screen and show you guys a few searches that you can do to find information just by using Google. Now we're on Google, so to start, we'll use the following dork, which I'm going to type out. But we're going to search for file transfer servers, also known as FTP. And we're going to look at any FTP servers that were published sometime this year. Searching for these servers can allow us to find files that are supposed to be internal but were unknowingly made public. So in order to do that, we can type in title, and then we're gonna do index of, and in URL, that's basically gonna search for specifically FTP, and again, FTP is file transfer, and we're gonna do after. So we want to look at something within a year, right? So we're gonna do after 2020. Now you look at all these, we get all these FTP servers. Now, one rule of thumb here is that if you do find like passwords or anything like that, or anything that you can log into, please don't log into it, because that's not, you shouldn't do that. That's not ethical, right? This is, once again, this is for educational purposes only, just so you can stay safe out there. Don't let this stuff get leaked. This is why I want to show you this, so you can be more secure and not let this stuff get online for people to easily access your stuff. But with that out of the way, let's take a look at this one right here. See, you look at this FTP. This FTP server got leaked right here. And then there's a lot more here. There's FTP directory listing. All these files got leaked. I'm not going to open any of these, just for privacy aspects and stuff. But again, this is out there. It's open source, and this is a part of OSINT that you can leverage. And if you want to make sure that none of your critical FTP files are none of your files are out there in the internet. Say you're transferring it to someone, and they can get leaked on the internet. Anybody can find it on Google. Next one, I wanted to find log files with passwords. So the next step will be to search for files of the extension .log type, and searching for these log files will allow us to look for clues about what the credentials to system or various users or admin account may be. And once again, don't use this information to log into accounts. This is just to show you that this stuff's available on Google. So let's do that. So we can do all in text, and we are looking for a password, and the file type we're looking for is a log, and we're going to do after, again, 2020.
You spelled a password wrong there.
That's why. Whoops. There it is. There it is. Now we see all these passwords. Okay, so this one's hidden right here, but right here we found a password right here. Let's open this up. Again, this is hard to read, but it did highlight that a password was leaked in this. F inside password. There it is. This password was leaked right here. Login name, admin, password, and this is the password. And this is some sort of database that got leaked. This one right here, this link right here, this login page, their credentials and password got leaked. So this is an example of logs. And again, it's just a simple Dork query, searching for password in text and the file type blog, and within the past year, and you can find that. Next one is databases. So configuration files should not be public pretty much ever, and basically like files with extension .env are great examples of this. So if we search for .env files that contain a string for database password, we instantly find passwords to this database we've discovered. So to do that, all you got to do is we want to do file type, and we are going to do env because that's the extension that database credentials are leaked, and then we are searching for db password, and after we'll say again 2020, and there it is. A bunch of links come up here, and let's go to this one right here. As you can see, there's a password that got leaked here too for this database right here. Look at this. This is a server, and this is all on Google. Goes to show you that if you're not careful, all this stuff can get leaked. And then you can also find email lists. So for email lists, they're a great way of scraping email addresses and trying to find information on corporate or school targets. And these lists are frequently exposed by companies or schools that are trying to organize email lists for their members. So these are usually stored in Excel, right? And the format for Excel is .xls. So all we have to do here is type file type .xls, and in URL email, whoopsies, email.xls. Now we're basically searching for Excel and an Excel file named email.xls that may have been leaked. And one thing that Google does is when you keep running these Dork requests, Google really doesn't want you to run these Dork requests, right? And what it does, if you keep doing it, it'll notice, and then if you do a lot of them, it'll keep giving you these captchas to do. So yeah, just wanted to show you guys this. If I can get past this captcha, there we go. Now, as you can see, we found a bunch of Excel sheets here. I'm not going to open these, but a bunch of Excel sheets with emails and a huge email list. And the last one that I wanted to show you guys was cameras. Now, Shodan isn't the only way to find cameras. You can do that on Google too, with these Dork queries. And hopefully Google allows me to do this. It doesn't put me through another CAPTCHA. But what you can do is in URL, and then top.htm is a common camera that it's a common camera URL that's used. So it's a common webcam that's used. So we want to search for that. And then in URL, we're going to type that again. And I made a little typo here in URL. And we want to look for this in current time because we want our live camera footage. So current time. And this is basically doing camera hunting on Google. Now let's see one of these. This is a webcam, live footage. Again, it appears to be frozen, but as you can see the date right here. But yeah, you don't need Shodan to search for cameras. You can do it around Google using these Dork requests. Let's look at this other one just for fun. Another camera footage right here. But yeah, this goes back to your privacy question that you asked a few episodes back, Deepak. And I wanted to show our viewers this just to show them that this stuff is available not only on Shodan but on Google too. All you gotta do is do this advanced queries, and you can find this. And this is a part of OSINT, and this is why our viewers should stay safe and securely send their information so it doesn't get leaked like this on Google, where anybody could just find it with a simple search like this, right?
And the first time you showed something like this to me, I was like, yeah, it's not a privacy concern, but now that I've seen it more than a few times, I guess I'm a little more neutral to it. But again, like, yeah, it just goes to show you can find anything on the internet, so just be careful. The stock market discussion. So I know that a lot of people on Twitter, on Instagram, and really across social media have been talking about the fact that while the stock market is at all-time highs, many of the retail portfolios are almost at all-time lows. So I thought I'd really just talk about that a little bit more, because you've seen the small caps get hit particularly hard, the growth companies get hit particularly hard, and the SPACs, the special purpose acquisition companies, there's blank check companies that have recently either come to definitive agreements and completed the merger or are still in the process of looking for them. Earlier in the year, those were trading at premiums. Now you've seen those premiums completely dissipate into net asset value amounts now at $10 per share, which is the net asset value for a SPAC. But I think those three were really the money makers towards the end of last year to the beginning of this year. Obviously, the large caps saw a good run as well, where you saw Tesla, obviously, in that incredible run. Saw Nvidia, Facebook, all of those make great runs, right? But especially, I think those small cap stocks were really driving a lot of gains back earlier in the year, right? So I wanted to talk a little bit more about that and really how long we can expect this correction period to take place. So before I go into it further, I wanted to talk a little bit about how much margin is being used in the markets. So Syed, can you pull up that link I sent you from FINRA, and let's just talk about that briefly.
For sure, you can see it on your screen, our viewers can, so go ahead.
Let's just scroll down. So this is the amount of money that's really been used on margin to invest in stocks. So what I wanted to bring to your attention is that if you look at 2020, so scroll down a little bit more, Syed. If look at 2020, just eyeballing this a little bit, you'll see what the average debt is. Like, if you were to put a figure on it, looking at this, I'd say about 560, 580 is probably around average, right? Would you agree? Something around those lines?
Yep, absolutely.
If we scroll a little bit below, let's look at 2019. Okay. Mm-hmm. Here, again, it's more so in the fives. I'd say the average here is around 550. Okay, so 550 to 580 was roughly how much margin was being used. Now let's go up to 2021. Let's scroll back up. Mm-hmm. Here, January, February, and March. Mm-hmm. Okay, you see that actually it was a lot more being used here. 798, 813, 822. Your average is over 800,000 here. So a lot of people were actually buying on margin. And what you saw here, and we saw a little bit of this a few weeks ago, is that there was a suspicious amount of margin calls going on, right? And that trickled this sort of domino effect of having to cover those margins by selling off of these growth stocks, really, that you saw these massive run-ups in. What else usually gets hit? Like, when you have a margin call, you don't want to sell your blue chip stocks, right? You want to sell your growth stocks that are very, very volatile, your SPACs that are sitting there that don't really have a target, but they're sitting at a premium, like IPOF, which is Chamath Palihapitiya's SPAC. That was almost at $17, $18 a share, trading at an 80% premium. Now I think it's all the way back to 10. Why? Because they're actually covering these margin calls by selling these blank check companies. And they're also taking profits on the high growths, because you saw 300, 400, 500% returns on these small cap stocks. And really, you saw after that massive run up, you see the decline, and there's panic selling, there's euphoria there, and then there's the margin calls that come in place. So you just see a mass exodus from those stocks, and you saw the Dow increasing because people have sort of switched from, okay, let's move away from buying on margin towards buying something that actually has long-term legs, right? So I personally think, I think a lot of other investors that have presence on YouTube, Twitter, et cetera, you can all say is that you probably won't see a return into of volume, especially because these small caps don't really have much volume in their movements day to day anymore. You'll probably not see that volume come back until the margin levels get to more normal, like based on what 2019, 2020 averages were. Until it comes down to that, you likely won't see that same spike in those small caps. So again, we're sitting heavily above the 2019, 2020 average. So I think there's still a while to go before we see a recovery in these types of stocks. And until then, I think there's eventually going to be a point where these are great buying opportunities. And the way I want to illustrate that is that I know I told you to open up a couple of tickers here. So let's look at some of these stocks that I'm talking about. The first one I talk about is CCIV. Out that they were actually going to be merging with Lucid. This stock popped from $10 to $20, and I saw this thing rise almost every day to the point where when it came close to confirmation, it hit almost $60. And as soon as the definitive announcement came, it basically started tanking from there, and that kind of led to sell-off. So really, I think this is like the prime example of what happened in the markets, especially with the small caps and the SPACs. Like, you saw these massive run-ups from 10 to 60 is a 6x investment, right, on your investment in a matter of a few months, really just 2 months from January to March. So you see this cooling off period now, and I think it's going to be a prolonged period. I think it can take the majority of the year, but really what you look at from the top to where it is now, from $60 to $20, that's a 67% correction. Now, I think it has room to go lower, but if you were a believer in Lucid Motors, this is a great time to buy it, because you're buying it at almost 70% down. So this illustrates my point that these are going to create historical buying opportunities that you'll look back at and potentially regret, like, maybe I should have bought in. But market psychology is such that you see these massive declines and you're scared to put more money in now because you've been burned. But again, like this is just one example. Let's look at some other ones. I think I told you about Open Door, OPN. It's trading at $18.39 right now. Okay, so what was its high? Let's look at 6 months. Where's that peak, Said, on the 6 months?
About 35.88.
35, 36, right? So, okay, so now what's that decline? More than 50% from that point onwards, right? I'd say it's about more than 50%. I think this is a viable business because it's trying to disrupt the real estate market, right? So I actually thought this is a great company, and I was actually considering buying it at $30. But now look at it; it's down to $18.39, and this is a former SPAC, by the way, right? Mm-hmm. So this presents a great buying opportunity again, right? So, like, this is another example. Like, I can keep going on and on. I think one of my stock picks last week was Fubo. We'll get into that discussion a little bit later, but I just wanted to highlight, like, these are just some companies. I think one other one I should mention is Clover Health. So CLOV. Let's just bring that up very quickly. Sort of a little bit of a squeeze lately, but really what happened here is that when it got announced, this stock went from $10 all the way up to 17. So that's a 70% return. And since then, it's been bleeding out, bleeding out, bleeding out. They've had they've been the target of a lot of shorts as well. But you can see, like, Clover Health, if you're in the US, it's actually quite significant. Like, you can see Clover Health everywhere, and they have plans for expansion. It's a very viable business. And to have the opportunity to buy it from 17 to, before this 20% rip on Friday, $7, again, that's a great buying opportunity for the long term, right? So I think while it may take a while for volume to come back into these plays, these are historically great buying opportunities that we might look back on and be like, yeah, we probably should have gone into it, right? So that's just something I wanted to share with my viewers. Obviously, we can't stress this enough. Do your own due diligence. Make sure you're investing in the right companies. But I'm just looking at it from that perspective. Like, a lot of retail investors chase investments. Like, when you saw Tesla run up from like $100 to $300 to $500, people started buying at $600, $700, $800, right? Yep. If you had the opportunity to buy a Tesla, like, if you were really into Tesla, you should have bought at $550 when it dipped that low. But we got scared, right? You're scared in the moment because you think it has a lot more to go down. But really, it's back at $750 now. So that was a great buying opportunity. So whenever you have a chance to buy into a company that you believe has long-term viability and it has a lot of growth potential, then if you are being gifted this opportunity to buy at 60, 70, 80% lower, then it might not be a bad idea to scale in. You shouldn't go all in right now, but it might not be a bad idea to take a starter position in a company you're convicted in. So again, this is just something I wanted to voice to our viewers, just to be aware of, and not to be, like, you shouldn't be scared per se of the sell-off. You should look at it as an opportunity. And that's why, again, we mentioned stop losses. If you saw that, if you were that person that bought CCIV at $60 and you saw it falling to 50, 40, 30, at some point it should have hit your stop loss and you should have been like, okay, that's enough, right? Because now it's below 20. So that just shows the importance. Like, you can't let positions go all the way down, right? So again, this is some part of it comes from experience. Part of it we try to educate our viewers on, just to make sure that they have the tools in place to succeed. But again, like, you have to be aware of, like, the fact that this is what happens in the markets, and again, it's a risky investment. If you don't want volatility, you should go into a GIC that's more in line with your own risk tolerance, right? But again, this is just something, I know we're running a little bit longer on this segment, but I did want to highlight this whole concept to our viewers on how long we might possibly be in this situation, but ultimately it could be a great buying opportunity for these companies.
To our last segment of episode 17, our stock picks from last week, and also our stock picks for the coming week. So for last week, my stock pick was Roku, and let's look at how it did. So as you can see right here, if I go back to the 5-day, it started off at 371 on Monday, and then it kept going down and up, but it had its high here on Wednesday at almost at 393, but then it fell down again that same day to 379, and then it stayed around like the 370, 380 range. Did have a high of 391 on Thursday, but then it dipped back down low. It was at 379 again, and then and it closed off at around 378. Once again, this is a recovery stock. Like, it went down tremendously as it was trading before at about like 500 per share, right? So again, I bought the dip in this, and perhaps you should take a look into buying the dip as well, because it could go up to where it was before, right? So once again, do your own due diligence and do your own research, know your risk tolerance. But again, this is a long-term hold for me, as I look for it to go back up to where it was back a few months ago. Now, moving on, Fubo was Deepak's pick, so I'll let Deepak take it away here.
Yeah, thanks, Ed. So again, this is one of those stocks that hit $60, which I talked about before, and then really it tanked all the way down to around the mid 20s, recovered to 50, and then basically been on a downtrend since then. Again, we still haven't been able to catch the bottom on this play, but at some point you got to believe if it's down to 18 from $60, that it'll soon find the bottom. We don't know what that is. Again, it trended down over the last 5 days. It's one of those other high growth stocks that I mentioned, that's trading at a high multiple of earnings. But again, I think long term this will be a great hold. And at 1886, personally, I think it's a great buying opportunity, and I will be buying some of the dip here, especially if it continues to go down. But again, like, this is more of a long-term play. I know I mentioned it weekly, but one of these weeks where you do find the bottom, you will see a significant gain. So definitely keep it on your radar, especially if it continues to go down in the short term.
Absolutely, yeah. But now moving on to our stock picks for this week. So I'll get started with mine. So Alaska Air is on my list for stocks to look out on this week. And one of the reasons why is because obviously the recovery play, airlines is a big thing in that, as vaccines get distributed and we do get back to normal, airlines are going to go back into business, right? And more people are going to fly, etc. But one thing that I found interesting with Alaska Airlines is that it's expanding its service and presence in this county right here. So they have new nonstop flights arrive in time for summer holidays and fall harvest. Now, this article talks about it more here, but I'm just going to go over it briefly. But they're increasing its service and commitment to Santa Rosa and Sonoma County with more nonstop flights between Southern California and the heart of wine country. And starting June 1st, the airline will offer daily nonstop service between Santa Rosa and Sonoma County and Burbank. And on September 8th, Alaska will add additional flights to both Orange County and San Diego. So if you look at this map right here, basically they're going from Seattle all the way to Santa Rosa or Sonoma County, and then Burbank, Los Angeles, Orange County, and San Diego. So this is great news for them. And again, I think with this news coming out, if you look at their stock right now, so let's look at the 5 days. So for last week, so it was trading at it started out last week at like around 70 per share, yep, and then it dipped all the way down to 69. This was a great buying opportunity, and then it dipped up, right? And this news came out, I believe the article was from April 16th, so that is Friday. So with that news coming out this week, let's see how the stock does next week. A stock to keep on your watch list to see how it does, and it could go up with this news coming out, with them expanding, and of course a long-term play as well, with recovery play with COVID restrictions loosening up, vaccines being rolled out, and yeah. So that's my stock pick to look out for. One of my stock picks to look out for. I'll let Deepak address his stock pick for next week, and then I'll come back and announce my second stock pick for next week. So Deepak, take it away.
Yeah, thanks, Ed. So again, this stock picks again another long-term hold, but I thought this was a great opportunity to highlight it because Morgan Stanley is obviously one of the best investment banks and really a top financial service company across the U.S. It actually reported blowout Q1 earnings, so first quarter was tremendous. Again, all financial institutions really had a great first quarter. They all reacted positively. Goldman Sachs was up, JP Morgan was up. Bank of America was up, but this company in particular, Morgan Stanley, was actually down because they actually reported a $911 million first quarter loss tied to the Archegos, I believe I'm pronouncing this correctly, but Archegos Fund's meltdown, which it didn't previously disclose. So the fact that it actually was revealed in its Q1 report caught investors off guard, and it resulted in the stock going down about 3%, which is actually quite significant for a type of business like Morgan Stanley, obviously, right? Given the magnitude of its business and how important it is to the economy. So I think this is a great buying opportunity, similar to how J&J had actually dipped on the news about its vaccine. It recovered almost immediately. So I suspect that this will continue with a company like Morgan Stanley. So it should be a great opportunity to buy right now.
Awesome, yeah, and then the last stock pick for this coming week, and this is mine. So Walt Disney. So Walt Disney is a stock that, like, I think it's gonna go up in the long run, especially with recovery and COVID recovery. So just a stock to keep on your watch list. There's a lot of stuff on there where it's underperforming, and again, as we say, right, buying the dip. So some say it's overvalued, some say it's underperforming, but I personally think that it could go up to about like 200 per share perhaps. And if you look at the 6-month chart right here, wanted to show you, so it was down all the way 124 in October, right? And then it went up, and right now it's sitting at it also went up to like 201 back in March, right? So right now it's at 187, so it could potentially go back up to 200, right? So that's something to keep an eye on and keep on your watch list. And once again, we'll look at these stocks next week to see how they did in this coming week, and we'll tell you what we think going forward about these. But yeah, that wraps up weekly episode 17 of the Bottom Line. Just a few housekeeping items. So tax exclusive episode this week won't be coming out, as you may or may not know that on April 19th there is news coming out regarding capital gains tax and principal residences in an effort to cool down the housing market, and that's obviously big news, big announcements coming. We expect big announcements to come that day, so we're gonna cover that in an episode. We'll probably record it during the week and then get that released for you in the following week, but we'll keep you guys updated on our social medias for that. And then once again, we'll answer all your questions as well, so keep the questions coming. We're gonna address them as well, as we are almost near the end of tax season, and we want to make sure that you get your taxes done with ease. With that being said, though, this does wrap up weekly episode 17. I myself, Syed, and my co-host Deepak would like to thank you again for watching, and if you could please like and subscribe, that would help us a lot, and our content reach a wider audience, right? Because at the end of the day, we want to help you. And thank you for those of you listening as well on Spotify, Apple Podcasts, wherever it may be, and of course watching as well. And we will see you guys next week.